Yay! Hello! We are here. Happy Wednesday. I'm so glad to see everyone. It's a beautiful day. The kids are all in school today for the whole day until 3 o'clock. So I am just like, feel really good. Part of me wants to just like be super productive and do all the things. And then part of me just wants to like lay on the couch and just like drool on myself and stare at the ceiling. But I've already had meetings today, so it's a productive day and it just feels much more easeful. I loved having my daughter home for the summer, but it's also nice to have a little time apart. So I am going to jump in. Let me pull up Facebook so I can see any comments. If you're here joining live, say hello. If you catch the replay, please say hello. I'm always so grateful to be here and to have y'all here as a thank you. If you comment, you can ask a question or just say hello, whatever you say, any comment will get you entered to win my masterclass. It's 90 minutes, 4 ways to grow your business. We talk about energetics. We talk about practical stuff. Like it's a very robust masterclass. I love giving this away. It's literally the 4 pillars that I use with my clients when we're thinking about growing their business. So it can be used for all sorts of businesses, and it's just kind of a universal, very encompassing, that's the word. It's applicable to a lot of people. So comment and say hello, and I will pick a winner on Friday. So let me just take a sip of water and we'll get started. So looks like, or not QuickBooks, got QuickBooks on my mind. Facebook is like kind of acting funny. So just to make sure I can see comments, let me pull up a different browser. I want to make sure if y'all have questions, I really want to answer specific questions. Okay, we're cooking with gas now. I want this to be for you and to really get the information you need. So ask your questions, leave a comment, and we'll get rolling. So I love talking bookkeeping. I love talking year-end prep. As I always say, this happens all year long. This isn't like a scramble at the end of the year. I don't usually cuss, but if you've got kids around, like the year end can be such a shit show, and I'm so not for that. Like I am a parent, I have family, like my bookkeepers have families, like the CPAs that do taxes, they have families, the CFPs have families, all of you business owners have families. So like it being a shit show is just like not an option for me. And it just doesn't have to be that way. My background is accounting. I majored in accounting, worked in public accounting. I am still a CPA. I don't really do the CPA typical services you think of, but this kind of left brain analytical stuff is something I love, and my business was solely bookkeeping for the first 5 years. So I love QuickBooks. And today when I'm talking any logistics, just knowing that I use QuickBooks online. I used to use desktop. I got certified with Xero, but I'm not really familiar with those platforms, so I'm not going to speak to them. But if you have QuickBooks Online questions, please feel free to drop them in. We work in that all day. I'm a pro advisor. It's just the software. I'm picking it and sticking it, and that's what I use. So this conversation with bookkeeping, I love doing this because it's really just a piece of your business. Like just like your content creation, where you are creating content to put online and you're connecting and converting with your people, and then you have a sales process so that you are really connecting with your people and having this beautiful relationship building process. This is like the foundation, the framework for all of that, because having all these processes and systems in place is really just a great way that your business will just blow up, like in a good way. And so if you blow up in a good way and you have lots of clients, lots of revenue, lots of people to support, that is amazing. But this needs to be like a foundation piece that is like a well-oiled machine. I mean, I have seen like $1 million business owners that their back end was just shit show. And the client side probably didn't see that or know that, but from the business owner side, it was really uncomfortable. It's very stressful, not knowing what to pay yourself, not knowing what your gross margins are, not knowing what to save for taxes. Like that is what will drive your business into the ground if you like just feel so uneasy and stressed out because of this back end stuff. So I always say the back end is easy. So we get to build that part and do it in a great, well-oiled machine type of way. If you know me, my husband is a builder. So I always like to use the analogy of, they build a foundation first and then they do the framework. I'm looking, there's a house being built across the street and it's like they're building the bones of the house. And so this is really like the bones and the framework that you get to support your clients. And you get to really show up, even if the clients don't see the messy side of the books, the way you show up to support them. If you're stressed out, if you don't know your numbers, if you're not prepared, like you're not showing up as well and you're not supporting them as well. So I think this is just so important to have. And so let's see, just checking my notes. Yeah, and this is one of those things where it's not like directly getting you new clients. Like I get it. You're like, Jordan, this is not growing my business by chasing down W-9s or reconciling my accounts or, making sure everything's cleaned up and entered. Like I get it. It's not giving you like a direct ROI. It's not getting you a new client. Doing the content that converts will get you a ROI. Doing the sales process, like having that in place will directly get you more revenue. But this is like an indirect, like the way you show up, the way you support people, knowing, how you show up. And so that's what I wanted to say about that. But if you've been in the space, you'll hear me talk about these things all the time. So we're going to go over 5 things and then kind of a bonus thing at the end. And this is not anything new. Like this is stuff I'm always talking about. So if you're sitting there and you're just like, duh, Jordan, this is so basic. Like you talk about this all the time, like roll your eyes, like I get it. And I invite you to ask yourself, like, yeah, but are you doing these things? Like, okay, it's great to know that you should be doing things, but actually doing them, a lot of times there's like a gap. So I really want you to kind of like dig deep and be like, yeah, actually, I do know these things, but I'm not really doing them. And then why are we not doing them? Like, that's the bigger question. Like, does it have to do with really just knowledge? Like, I don't know QuickBooks. I don't really know even what you're talking about or how to do that. Like, that's an easy fix. Is that you're not doing it because you're not really set up for success. It's like, okay, I have my receipts in a big stack, or I don't know how to log into my bank accounts. You really want to set yourself up for success when you're doing these things and have everything you need in one spot. And then also just, why aren't you doing it? Some people are scared. Some people are like afraid of what they're going to find in their numbers, or they think it's just a house of cards and it's all going to come falling down. So I really want you to ask, like, okay, I know all these things, but am I doing them? And if not, why am I not doing them? So I think this is just like what I love doing with my one-to-one clients is, digging into these whys of, we kind of all know how to build like a successful business, like, especially if you're an online business, like the strategy is pretty simple and it's all out there, but not everyone does it because, the mind stuff that comes with it. It's not that they can't or that they don't know how or know a good strategy. Like every strategy works if you work it. It's just a matter of like, are you showing up and doing the things that you know you're supposed to do? So, the things we're going to talk about today are all knowable things, but what's not knowable is understanding why I'm not doing this. Why am I not doing it every week, every month? We're just so conditioned to think that business should be complicated and hard, but like, it really doesn't need to be that way. So sometimes we just need support. I offer free calls just to help get some feedback about digging and why we aren't doing these things, why maybe we're making it complicated. And this will just be another little side tangent and then we'll get started. But I've had conversations with business owners recently where they purchased courses or they purchased online templates or downloads, and they were frustrated because they're like, I already know this stuff. Like, I can't believe I just paid for this course or, bought this another template spreadsheet download, whatever it is. They're like, I already know this stuff. And it's like nothing against the people selling those things, but, it's really asking yourself like, okay, why did you think that that was going to be the next thing? Like, why did you think that buying this extra course had all the answers that you didn't already know? So that's why, like, I love this one-to-one work. And I'll drop a link later if you want to book a free call, because I think I'm booked for August, but go ahead and grab a spot in September, because like doing this work and figuring out the why behind stuff is just so powerful. So, we're talking about these things today. We're really going to talk about creating simple procedures and doing them. And if you're not, like, how can you get support for that? So I don't want to just give you this information and give you, you know, the steps and then just peace out. Like, I'm really here to like sit with people, work through the muck and any BS that's coming up. And this is just the bookkeeping side. So September, I'm going to get into sales. So that'll be really fun. But still with bookkeeping, there's just like stuff that gets kicked up and people are scared. And, you know, I always say like QuickBooks, you really can't mess it up. Obviously, you don't want to touch anything that has already been filed for taxes, but like bookkeeping, like it's not like I used to work in the NICU. Like that was like something, you know, if you messed up at work, like something bad could happen. And bookkeeping is not that way. You know, you can go back into QuickBooks and fix things. Like it's not set in stone. So give yourself a little bit of grace. And today we're not trying to call anyone out. We're not trying to like shame anyone or make you feel bad. Like really about like starting where you are, you know, wherever that is, like the Nirvana song, like come as you are. Like that's what I always think of, because like I have seen everything. So any questions you have, like I've literally seen it all. Nothing surprises me anymore. So do not be like scared, like, oh my gosh, I haven't been doing this. Like give yourself grace, give yourself permission. Go back to last week's talk. We really talked a lot about, well, the whole conversation is about giving yourself credit where you're not giving yourself credit. So, you know, really, this is not to like shame anybody or call anyone out, but just really start where you are. So I'll just check the comments. Everyone's quiet today. Take a sip of water. Now that like my kids are in school, I'm like, oh, I don't have to like race through this as fast because there's someone waiting in the other room who might just like pop in and who knows, do whatever. So the first thing we're going to talk about is check in with your CPA and CFP. So your certified financial planner, your public accountant, whoever's filing your taxes, like just doing a check in with them. Maybe they don't need anything from you, or maybe you're good, but I just think it's, first of all, from a practical standpoint of updating them with your revenue and your net income, finding out if you're on track for your tax liability, your SEP contributions, like, you know, sometimes if you're contributing to a Roth or an IRA or whatever, sometimes if you hit a certain revenue or income, you'll hit that limit. So you can't, you know, contribute the full, I think it was like $6 grand. And I'm not like versed in all of these rules. I just know the basics of it. But you know, like if you had a certain amount of revenue, you couldn't contribute $6 grand to your Roth. So it's better to like start a SEP, or there's like a few other options. So, you know, everything has its trade-offs, but you know, whatever your option is that you're going for, or that you need to talk through with your CPA and CFP, but getting in touch with them and figuring out like if you're on track for everything, really letting them know your revenue, especially if it's changed from the previous year, if you had a bigger year. Obviously, if your revenue's down, that can make a difference, but really knowing like if you're going to owe more in taxes, getting a ballpark of what that is, if you're going to kind of like max out of, you know, what you can contribute to certain things, knowing that ahead of time, doing like revenue projections for what you can contribute to your SEP so that you're already like saving for it. Like from what I've been told, and again, I'm not a financial planner, I don't file taxes, but you know, my understanding is that you really don't want to contribute to the SEP until the end of the year, because you want to make sure that your revenue is like set and you know it, so that you don't like over or under contribute. So you know, if you've been keeping up with your books, you should know these numbers. And again, if you don't know these numbers, if you don't have good revenue like numbers in your books, or if you don't have all your expenses recorded, you know, it's really like thinking about why. You know, this is where it comes into that, like, I don't want to look mentality. Let's just wait till the end of the year and we'll just figure it out. Like, I don't know. I don't want to deal with that. It's scary. Really inviting you to dig into like, yeah, I know I'm supposed to do this, but like, I'm scared, or thinking about whatever's coming up for you, because that's just so important. So reach out to them, and just, it doesn't have to be like, send them your reports and all your financial data and tell them all the numbers, like really just touching in with them and saying, hey, you know, these are kind of my overall ballpark numbers year to date. Like, you know, here's maybe how it compares to last year. What do you need from me? Do we need to have a conversation? Do we need to change anything? Are we on track? Like really just kind of opening that conversation because they are so busy. You know, if you look back, it was a couple months ago, I guess, that I had Doug McIntosh, he's a good friend and he's a tax CPA, and just, you know, they're so busy. They can't really reach out to every single person that's their client and be like, hey, how's it going? Are we on track? What's your revenue? You know, like they're just, that would be great. And maybe you have someone who's like newer and has that capacity, but a lot of these places are just so busy. And it's really on us as the client to really reach out to them. You know, usually they'll send you a packet kind of pre-tax season, but really just taking that initiative. When it's not busy, you'll probably get better feedback. You'll probably get better response, you know, because they're humans too. They want to be with their family at the end of the year. Like, yes, it's their job to do this stuff at the end of the year and crazy busy season, but like, you know, you're just going to get a better communication, and they're not going to be as hurried. They're not going to be as overwhelmed if you contact them this time of year and have that conversation. So that is tip number one. Check in with your CPA, check in with your CFP. And anyone else who may be helping you. You know, those are the ones that come to mind. But I can't think of another professional that would need to know that, but if I think of something, I'll mention it. Number two, this is huge. Make sure your accounts are reconciled. When I say reconciled, I mean going into QuickBooks, entering everything in the banking section, going to the check register, hit reconcile, pull up your bank statement, pull up your credit card statement, line of credit, whatever statement, putting in that ending balance, putting in that date, and then reconciling. Like that's what I mean by reconciling your accounts. I feel like people enter things into the banking section, not calling anything out. I've seen it all. But you know, they think in their head that if it's entered in the banking section, then it's reconciled. And that's not the truth, especially if you do invoicing or payables through QuickBooks. That can kind of, you know, be like something where the timing is a little bit different. But, you know, if you basically accept cash, everything's like a point of sale, or you can pay with everything with a credit card, like everything you enter in the banking section should be reconciled. It should be an easy reconciliation. It's just kind of when you have those outstanding items where there's kind of like a time delay, that it kind of makes it a little, not difficult, but trickier, you know. So just making sure every bank account, that's checking, savings, making sure every credit card, petty cash, like if you use petty cash, we reconcile a couple clients petty cash. Some of them is really like catch-all account for just like money at the ATM that they just they don't know what it went with or what it went to. But really, if you have petty cash, like it's ideal to try to like, you know, tighten that up, button it up. And then like lines of credit, notes payable, stuff like that, like those should be reconciled because you're usually paying interest on those. And you want to make sure that you are capturing those interest payments. We had a client who didn't give me her credit card information all year. And every time I asked her, she was like, oh, I really don't put anything on it. Like I don't use it. Then I finally got the statements from her for this year, like 7 months worth. And I was like, holy cow, there's like a ton of like interest payments on here. And fortunately, she hasn't filed her taxes yet for last year. So we went back. I was like, yeah, you didn't have much activity on here, like transaction wise, but you were still paying like interest charges and finance charges. Like, so make sure those are entered and reconciled because like that is an expense that helps lower your revenue, which helps lower your taxable income. You know, the whole purpose of reconciling your account is to make sure you're not over reporting revenue and you're not under reporting expenses. First of all, the IRS does not like that. Well, they don't like the opposite, but for you as a taxpayer, like if you are over reporting revenue or you are under reporting expenses, then you are paying more in taxes. You know, and that's when the government is like the opposite. If you're under reporting revenue, over reporting expenses, that's when they don't like it. Of course, they would like for you to pay more in taxes. Well, not, they'll take it, you know, they're going to take it. But that's why reconciling is so important, is because you're looking at your bank, you're looking at your credit card, and you're making sure it's in the book. So it's like, and we found this recently with a client. They had some big transactions where a customer paid an invoice through QuickBooks. It was processed through QuickBooks Payments. mean, these are like $17,000 transactions, and it's the height of their busy season. And for some reason, something happened with the person entering and receiving that in QuickBooks. So it was recorded in QuickBooks, but it was not in the bank. So we only found this out when we did the bank reconciliation. It's like, okay, it says $17,000 in QuickBooks was deposited on this date, but like I do not see it anywhere in the bank. So if we hadn't found that, then they would have over-reported that revenue for their taxes, and like maybe never known that the client didn't actually pay that money. I mean, maybe the client would have come back later and be like, that 17,000 never came out of my account. And these people were very honest, like they contacted them, and the payment didn't go through, and there was definitely a time delay, probably like a month from when it happened to when we reconciled the account, but they were very like paid it right away. But that's something really to just make sure, especially if you're invoicing through QuickBooks or doing anything like that, that you're really like making sure it matches the bank, because that's what really happened. We want QuickBooks and the bank to both tie and be correct. Because obviously, if you're missing money in the bank that you're reporting in QuickBooks, that's not good. And then you don't want to, have it vice versa. So that's kind of the purpose for making sure accounts are reconciled, is that you are accurately reporting revenue, accurately reporting expenses, because that's what gives you the taxable income that you are taxed on. Except for like the other things that CPAs can not do, but that's kind of your base. And then obviously you have like deductions and stuff that you try to take advantage of, but that's kind of like your base level. So let's make sure that that's correct. Take a sip of water. So those are the first two. Let me just double check. Y'all are so quiet today. If you're catching the replay, feel free, I'll answer questions and make sure that, we get you the information you need. So number 3 is clear up any unreconciled transactions. So this goes with kind of what we were talking about with the reconciliation. So you're making sure everything in QuickBooks is reconciled. So they're really like, if we're talking about what it looks like, is everything is green, and then the reconciliation difference is 0. And then if you look, sometimes if you do invoicing or you write checks and you record those in QuickBooks, you will have items that didn't reconcile. So they are not checked, they are not green. I think the color is green. I look at it like a lot, but like I think it's green. But you'll see those things that didn't reconcile. And so what I like to do before I hit reconcile and clear that away, I like to look at what's not reconciled and make sure that it's correct. This would be, so if deposits are in QuickBooks that didn't clear the bank, really going through in your bank account and making sure, like, did you receive the money? And this kind of goes back to what we talked about before, but figuring out, is it lumped with another payment? And so it is recorded, like it did clear the bank and it is recorded, but it's kind of recorded twice. So that's kind of what you want to make sure. But just looking, if a deposit didn't clear the bank, I would check, you have that ability in your bank. You could kind of like look it up. Did it clear like 5 days after the bank statement came out or whatever? If it's at the end of the month, it just may not have been caught that month in the bank statement. So, that's totally fine. If it doesn't clear, then it's like, it's going to clear the next month. But if you don't see it clear, right away, then I would do some digging and figure out what happened to that deposit. Is it a duplicate in QuickBooks? Did something happen with the payment processing that it didn't actually go in the bank? Like, those are kind of the two main things that come to mind, or it being kind of somehow lumped in another payment and it's recorded somewhere else and that would be a duplicate. But, those are kind of the ways that the digging that I would start with for deposits. I'm trying to think if anything else comes up with digging wise. It's kind of just like being a detective and figuring out what happened. So you definitely want to clear that up, because there's the potential for that income being counted twice. And so moving on to expenses, if you have expenses in QuickBooks that didn't clear the bank, just checking, like, did the vendor receive it? If you did an actual check in the mail, like maybe it'll take a couple days or a week or however long for it to clear, and you can just, you can kind of keep looking back. Did it clear? You could check in with the vendor, like, hey, did you receive it? Have you just not cashed it? You know, checks kind of may have the potential for that longer lag time. And then just checking and making sure, like, is it a duplicate? Like, you really just want to figure out, like, and that's kind of where you just kind of check with the vendor, kind of check with what happened, and just making sure that you're a detective, you're digging. If you get stuck, you know, reach out, get some help, because I like really know accounting. I mean, obviously that's my background. And so I know debits, I know credits. I know what's going on behind the scenes of QuickBooks. So it's really easy for me to like dig, and like I love doing catch up and cleanup work. Back when I did more of the bookkeeping stuff, because it was like being a detective, it's like having that ball of string or that knot that you have to like, you know, undo like one little knot at a time. And then it kind of just all works out. Whereas I found, you know, I've gotten work from other bookkeepers, and not to like, you know, they're doing the best they can, but some bookkeepers, they know how to use the software. Like they know how to enter in QuickBooks, they know how to reconcile, but they really don't understand like the accounting behind it and like what the books are doing. And so if something messes up, they don't know how to fix it. Whereas like, I know like if you record an expense, that's going to debit the expense and that's going to credit cash. It's going to debit the expense and it's going to credit the liability. Like I know, because I know accounting, like how to figure that out. And so for me, it's just like a fun game. Whereas like if you don't know that stuff, I can see how like digging and being a detective can be so much harder, because it's just not like known facts of like how the transactions affect the chart of accounts. So reach out and get some help, because you could just like kind of be on this spiral that I've had people come to me and it's just like blowing their mind. They've spent a ton of time on it. And for me, it's just like, oh yeah, you know, like this is fun and easy. And then for them, they just didn't have that accounting background to be able to do that. That's not what they do. I totally get it. So reach out if you're stuck, because you know, the thing about QuickBooks is like, you know, it's pretty simple. Like it's just accounting. You know, accounting, like that's what I loved about it. It had like rules. It was pretty black and white. And so it's just following the rules. So we can just figure that out if you have questions. But moving on to number 4. This is a big one. And this is when I'm like, every month, do this every month. Follow up with all your subcontractors and make sure you have W-9 forms on file. So if you are having people do work for you, professional services, or if you pay rent, those people need to report it as income. And if they're not employees, then they will receive a 1099, what is it? 1099 miscellaneous is what it was for forever. 1099 NEC, unemployed compensation, yeah. So the subcontractors will receive a 1099 NEC. The landlord people will receive the 1099 miscellaneous. So they changed the filing a little bit last year, but it's basically the same thing. It's just 2 different forms. So if you're paying someone over $600 for services, you need to get a W-9 from them. I always say if you're paying them for services, no matter what the dollar amount is, like get a W-9, just because you might hit that threshold and not even realize it. And then you have to like backtrack and scramble to get a W-9. And that's just not fun. It's not fun at the year end trying to get people to give you a W-9. I always say it's just like best practice that if you're going to have a subcontractor do work for you, get that W-9 form as part of their onboarding process. So ideally you have an onboarding process for your subcontractors and anyone doing work for you. You know, that can be other paperwork where they do an acceptance letter, or they do kind of a, drawing a blank on the word, privacy kind of agreement. What is it called? You know, basically where they're saying they're not going to like give all the information out that you use. I can't remember the word, but you know what I mean. But you should have some kind of onboarding process, unless they're like an attorney that you hire to like file some forms, or the CPA that files taxes. You know, that's not really an onboarding process, but those are people that offer professional services and that would be on that list. If you pay with a credit card, they do not receive a 1099. I do not understand the reasoning for that. I've looked it up. Apparently the credit card submits a 1099-K, or I think that's the form. But apparently they receive a 1099 from the credit card company. It's all very confusing, but if you pay with your checking account, if you pay with Venmo, that counts towards the 1099 that you give, and that goes at year end. And QuickBooks will automatically not pull the credit card charges. Like, it's smart enough to know that those don't come on it. So if you look when you're filing your 1099 and you're like, I paid them more than that, but some of it's paid with checking, some of it's paid with credit card, it's probably that those credit card fees just aren't pulling to it. And if you reimburse them for expenses that they pay out of their pocket, whether it's tools or food or software or whatever, that doesn't go on their 1099, so you need to split that. So if you give them a check or a Venmo, and I don't like Venmo, but if you Venmo, make sure you change the Venmo vendor name to their name. Don't leave it Venmo. And then if you reimburse them, make sure you split that out in QuickBooks. So there'll be, you know, a line item for the services provided, and then a line item separately for, you know, meals. If you're paying them like $25 back for meals, like split those out. So personally, I get 1099s for my clients, and some of them reimburse me for software. QuickBooks used to give a pretty good wholesale discount, so I would pass that along. Now they don't, so now I don't really do that for new clients, but the ones I've had people for years and years at this point, that's just part of their monthly fee, is that wholesale pricing. So that gets split, and that software that I'm reimbursed for isn't considered income to me. It's considered like other income on my P&L, but it's not like on my 1099 for my services provided. So hopefully that makes sense. Let's see, anything else about that? Let's see. You can send a W-9, you can find a PDF online, you can request it through Intuit, so you can have them set up as a vendor in Intuit. When you set up their vendor profile, make sure you check the box that they receive a 1099 at year end. If they give you a PDF like form, you can attach it in their vendor profile, and then just make sure you fill everything in correctly. And then if you don't have the W-9 PDF form, you can send it electronically through Intuit, but checking that box that they receive a 1099 is what's going to allow you to send them an email to request it. So make sure you have their name, their email address, and that box checked. Then you can go to, like, I think it's payroll on the left, then go over on the right, it's like contractors, find the contractor, and then it'll let you like request it electronically twice, I think, maybe 3 times, but after a certain point, you just have to ask them for a PDF. And some people, if they already have another Intuit account for like TurboTax or something, it messes it up, and like they can't submit it. It's just kind of weird. So if they can't do it that way, just get the W-9 form, attach it in QuickBooks. I like to save them. We save ours in ShareFile, but you can use another secure kind of document place to put it, just to have as an extra backup. But definitely attach it to their vendor profile. And really, I don't like, you don't have to like request a new one every year. I say that it's up to them. If they moved or something changed, like they need to get it to you. But you know, if you wanted to ask people every year for a new one, that's your choice. But you know, I don't really feel like you have to do that. And this is another like sticky area. Sometimes business owners, they kind of know that a subcontractor should probably be an employee, but they really want them to be a 1099 just because it's easier for them. They're not paying payroll taxes. So sometimes they're like not really wanting to give a 1099 because they don't want like to, you know, have that and be flagged, or have the potential for that. But like, really, if you want someone to be a 1099 versus a W-2, just like build the position for the 1099. And the trade-off would be that you aren't an employee and that you don't have to pay payroll taxes. You know, if you're like, well, I really need them to do all these things, then it's like, well, suck it up and make them an employee. Or the trade-off of those things that they aren't going to do because they're not an employee is that they get a 1099 and you don't have to deal with payroll taxes. Speaking of payroll taxes, I love Gusto for payroll processing. It's Gusto. And and I can send you a link. I think if you sign up, you should get like $100 gift card, and I get something, just full disclosure, but like they are my favorite. They're the cheapest. It's $39 a month, $6 per employee. If you're an S Corp and you just want to set yourself up for like recurring payrolls, like they have that option, and it's pretty inexpensive. But for the price and the service, that's just like, I'm just like, hand it over to them. Don't deal with it. But yeah, if you aren't sure whether it's a 1099 or a W-2, literally you can Google it and they'll tell you like what a 1099 looks like and what an employee looks like. So making sure that you're, clear with that and legit. Because that's the other thing that's sticky around that. Then the fifth one. So we kind of touched on this for a second, but making sure Venmo transactions have an actual vendor name. So I do not like to see people ever leave Venmo as a vendor name. That doesn't mean anything. So, every month, like for one of our clients that uses Venmo a lot, we have access to his Venmo account and we can see who everyone was that was paid. So we changed all the vendor names in QuickBooks to that vendor. And, he usually puts a note or a little emoji for what it was that he was, paying them for. And so we can sometimes use that to figure it out. Sometimes we still have to ask him, but sometimes it's for services, sometimes it's like food reimbursement. So just making sure that you have Venmo like not left as Venmo is just really important. Because if it is a subcontractor, we need to have their name on there. Because if you leave Venmo as a subcontractor name, it's not going to pull to that person's 1099 at year end. And making sure you have a W-9 form. Again, lots of people know that they're paying people through Venmo and they think that it's like hidden in Venmo, that they don't have to like give them a 1099 at year end because they just leave it all as Venmo. And I mean, if that's a chance you want to take, that's fine. But like, we don't do that with our clients. I don't recommend anyone doing that as a way to like hide, subcontractor payments and just not have to deal with them. Because it's really not that scary. It's really just like get that W-9 form. QuickBooks makes it easy as long as you're like entering everything through the year. They make it easy to file those forms at year end. So if you have any questions about that, let me know. So those were the 5 things, and then I have a bonus. So just to recap, check in with your CPA, CFP. Like I'm practicing what I'm preaching. I checked in with my CFP this morning. I'm calling CPA firm this afternoon. Doug, who was here a few weeks ago, was our CPA and he left. So I have to figure that out. So I'm doing what I am telling everyone to do. So check in with your CPA and CFP. Make sure your accounts are reconciled. Number 3, clear up any unreconciled transactions. 4, follow up with subcontractors to make sure you have W-9 forms on file. And 5, make sure every Venmo transaction has an actual vendor name and is put to the correct account. And if it needs a W-9, put a W-9 with it. So the bonus piece of this is check in with your target revenue. I mean, we are now like well into the year. Year end is fastly approaching. Like this is a great time to see how you're stacking up with your projected revenue or your target revenue. Some of my clients have targets where we take last year's, then we add a certain percentage, or just in their head, they want a certain number of clients. And so based on how much each client would be, that's their target revenue, or they're doing a launch and it costs this amount and this many people can fit in it. Whatever you use to get that revenue, like really do like a year to date, like as of January 1 to 7/31, like how is your revenue stacking up to what you wanted? And then again, this is just another really big place where, are you doing this like from, do I have the correct information, or I'm just too scared to look and I feel like I haven't been doing as well and I don't want to look at the numbers. That's just a really big question to have. I actually had a client, we were Voxering together. It's kind of like our, like having me in her back pocket all the time. And she was just like, felt like revenue was really down. And I looked, I'm like, actually, you're like, forget the actual number. I don't remember. It was at least like 6 or 7 grand revenue. No, it wasn't revenue, it was net profit. Her revenue was a lot higher, but the net profit was at least 6 or 7 grand higher than last year. And she like had no idea because she's too scared to look. And this is why we do our work together. But, you know, it felt to her like net profit was way down. Like she felt like she was just spending all this money on ads and like, you know, her just take home pay was so much less. And it's really like when we looked at the numbers, like she was doing way better than last year. And yeah, it may not be her like target net profit, but just having that information and being able to kind of like reframe that, like, actually, I'm not doing as bad as I thought I was. Or, okay, so I'm not hitting that projected revenue yet. Like, what else can I do? Because we're all about like using that information to empower us and figure out like, okay, if we're not there, like what's going on? You know, did I lose some clients or not have as many people sign up? Or, you know, just people are traveling more this year, so they haven't been coming into the store or whatever it looks like for you. But asking those questions and really being a detective, digging deeper and getting support if you need to. So that's all I have for today. So if y'all have questions, feel free to drop them in. Again, anyone who comments will be entered to win my 90-minute masterclass. We'll pick a winner on Friday. I'm here for specific questions. If you have something very specific or general, whatever. And that's it. I'll drop the link if you want to book a call. August is full, so we're booking for September now. So grab your call if you want some free support, and I will see you next week. Thanks so much.